Now, here are some key comments and takeaways from this morning. We won't raise interest rates to cool the economy just because the employment gets high. Powell said, talking about the Fed's fund rate, which again, Keelan talked about this. The Fed fund rate is the cost for banks to borrow against each other. It's directly tied to short term loans, not mortgage loans. Mortgage interest rates are tied to how the Fannie Mae 30-year bond is trading. Again, with inflation, bonds are going to drop in trading price and mortgage rates are going to go up. What affects the Fed's fund rate then directly affects prime on short-term loan is going to be your home equity line of credits, car loans, and credit cards. So, again, nothing to do with what mortgage interest rates. And a lot of times you'll see the bond market not favor well when the Fed is lowering the Fed's fund rate, which again is the cost for banks to borrow against each other. Powell also said that the Fed is committed to getting back to the strong labor market. High inflation is very bad for the state of affairs. The Fed will not allow it to happen again. In the next year or so, more likely prices will move up, but not stay up, and certainly not enough to move the inflation expectations above 2%. Now, we are committed to staying on the playing field with our tools until the jobs are really done, until they get their job completed. So it's good to be where we are relatively where we're being expected a year ago right now. And if we can end the pandemic, get back into normal to avoid the long-term damage, that would be a good thing. Next couple of months will be very important on the pandemic. So said by Fed Jerome Powell. He's been on the chairman of the board governors of Federal Reserve System on February 5th of 2018. Also for February of 2018, he had his four-year term. Powell also serves as chairman of the Federal Open Market Committee and the system's principal monetary policymaking. Paul has served as member of the Board of Governors since taking office on May 25th of 2012 to fill in an unexpired term. He was reappointed to the board and sworn in on June 16, 2014 for a term ending on January 31st, 2028. Now, the Fed is scheduled to buy $13.6 billion in mortgage-backed securities this week, of which they would be buying mostly the 2% coupon, but also the 1.5% and the 2.5%. It's amazing how they still are saying that they're buying $40 billion per month, which is clearly not the case when they have actually been buying almost that in just a week period of time. Initial job claims, which measures individual filing for unemployment benefits for the first time, was pretty flat at 745,000. Continuing claims for those that continue to receive benefits decreased by 124,000 to 4.3 million. The pandemic unemployment assistance claims, which gives individual benefits who would not usually qualify, decreased by 191,000, while the pandemic emergency claims, which extends claims by 13 weeks after regular benefits expire, decreased by 600,000. And that is your money chat for today.